Hi, this is Sam here with the Bulletin Board Heroes here at Zach's Traders Cafe for Wednesday, the 20th of March. Starting off with the FTSE, which bounced off 7,700, which is where we were hoping it would bounce. And above that, we're still looking for 78.50 by the end of next month. We're giving it that amount of time because the FTSE is a very slow market. Below 7,700 and that broken February resistance line, there's a risk of a test of the 50-day line, the third one it would be, or third or fourth one in the recent past, 76.30. But with the 50 and 200-day lines both rising now, we're sort of more on the 7,800 plus zone rather than downwards. But obviously this is a market going nowhere fast. Moving on to DAX, and here you can see that 17,900, that September resistance line projection, sort of become the support and trading zone for this market. Above that, or at least above the 18,000 level, looking for 18,500 by the end of next month or even sooner. On the downside, it's just March support there around 17,600, which is the area that we would expect any dips to go down to. That's just above the floor of the rising trend channel from back in October. The Dow is next, and after a few days of dilly-dallying, the market has actually bounced and hit, well, it's ricocheted off the floor of that rising October trend channel. That level there around the 38,700 level. Above that, we're looking for 40,000 by the end of next month. Best case would be 41,000, which is the top of that late September, early October rising trend channel. Moving along to the situation of Bitcoin, which is where the rug's been well and truly pulled. We're down from, 73,000 to the low there near 61,000, hoping that the initial March support there at just on the 60,000 level will hold. Below that risks a move down to the 50-day line, 56,700, let's say. But at the moment, as I said, we're hoping that this market will just bounce off the 60,000 area with a $13,000 retracement. In terms of the upside, if we can get back above the recent support on the way down around the 65,000 level, that was also the peak there at the end of February, end of day close above 65,000, could then be the trigger for a retest of 73,000. Best case is 80,000 by the end of next month, while we hold above the 60,000 area. Moving on to gold, which has done us proud in the sense that it's bounced off old resistance. So the old resistance there in December 2152, I think the low this time around 2150, and looking for this market to obviously retest 2200, which was the March peak, and then head up to that July resistance line projection 2260 as soon as the end of next month. We do break down then 2100, the obvious destination, but looks as though 2150 will do the trick. Moving on to the stocks, and starting off with Abingdon, which has good news with reference to boots. Just about to break that post-June falling trend channel there around 10.6 pence. Above that, we're looking for 14 pence in pretty short order, maybe the following couple of weeks or less. Ideally, the shares should do that even by the end of this week, perhaps. Moving on to the situation at CleanTech, and production is the name of the game, the pilot plant, etc., etc. Share price still near the lows, so just above the 15 pence level. We've got a resistance line there from December around 17.5 pence. That's the initial hurdle, while we remain above the 15 pence level. The ideal scenario is that by the end of next month, we're back towards 20 pence, which is basically the 2024 resistance area. Ongoing lap of honor as far as GCM Resources is concerned. We had support come in after the retracement from 12 pence plus around the 6.75 pence level, and we've got that V-shaped turnaround, looking for 12 pence over the next week or two, and maybe then we can come up with a new higher target towards 20 pence, but initially a retest of 12 pence while we're above the 7 pence zone on GCM. Not too many stocks today in the Bulletin Board here, so I thought I'd go up the food chain with Johnson Matthey, and here the recent resistance there broken around 1750. Above that, we're looking for the top of that rising trend channel from May last year at £20. It'll be interesting to see whether we have a smooth journey towards that or not. The big breakout here, really, the 200-day moving average, and the fact that we've found support above that 200-day line on the first attempt at breaking it actually is the signal that we should be able to get to £20 without any messing around in terms of retracement. Back to more usual fare, and that comes in the form of Kodal minerals. And here we've got this V-shaped bull flag formation, as I call it, bounced right on the rising 50-day line, which we like, largely because that tends to work as a leading indicator. Initial target here, 0.56, hopefully over the next, or maybe by the end of this month, and then maybe by the end of next month, all goes well, up to 3/4 of a penny, the November resistance. And that is valid, especially while we remain above the 0.45 level. Moving on to Powerhouse Energy, where the charting has gone rather well. In fact, we've hit that resistance line target that we had there around the 1.32 pence level. Looking now to see what the next level up may be, and that will be derived from the line I'm just about to draw now, which is heading up to 1 3/4 pence, and we're looking for that by the end of next month, especially while we remain above the 1.1 pence area, which is basically recent resistance for the shares, the 1.1 pence zone back in the beginning of the month. So above that, looking for as high as 1 3/4 pence by the end of next month, and end of day close above the recent peak there, the February peak. 1.22 would be the best indicator that we're on our way, especially after the unfull gap to the upside to start this week, and the recent golden cross buy signal between the 50 and 200-day lines. One of the mysteries of life at the moment is why Poolbeg has not managed to sustain its share price on the right side of the 10 pence level, but hopefully with today's patent news and a better sentiment towards the company, we should see that happen relatively soon. The recent support is around 9.3 pence, the floor of that rising trend channel from September. Above that, we're looking for 14 pence, perhaps as soon as the end of next month, but we want to see maybe a weekly close above the 10 pence level. On to strategic minerals, where there's been good news today with the Duchy of Cornwall. Here you can see that there's been another unfull gap to the upside. There was one to start the rally, which we spotted some months ago now, and the view is that above the floor of the top of the recent gap, actually 0.25, we're looking for as high as 0.35 by the end of next month. The ideal scenario is that the shares remain above that rising 50-day moving average. On to the last two. First one is Tirupati, where there's been director buying just below the 5 pence level, so the director's already on side with the purchase there. The initial target here up to 8 pence, or maybe up to the 50-day line at 8.8 pence, but 8 pence plus, while we remain on the right side of 5 pence. 5 pence was the initial support there earlier this month. The other point to note, actually, if you look closely, is that we've left a gap there to start the week, so there has been a decent bear trap gap reversal signal from below 5 pence. Let's see if it works this time. Finishing off with Versarien, which has managed to well, basically fail at the old resistance there from January. The key now is that we hold above the 50-day moving average around 0.13, so roughly where we are at the moment. But nasty situation given the decent rally we had, just shy of that resistance line target there around 0.28. That's it for me today. More updates tomorrow.